Welcome back to Fast Market here on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's going to be Landon Swan, the co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you. Good to be here. Appreciate it.
All right, so we're talking the consumer, we're talking retailers, and after Walmart's blowout report here, optimism into Target's earnings is pretty optimistic at this point. What are you guys seeing out of data on Target? Because I know they're trying to focus on the grocery side of the business, but it seems like Target is more towards the higher end consumer, and they sell a lot of more items that are with partnerships, so maybe at a higher price point. What kind of data are you guys seeing?
Yeah, so I think you're right. I mean, Walmart has sort of set the stage, very similar to what we saw with Home Depot and Lowe's, right? I think we could probably rerun your last segment and just replace the word Home Depot with Walmart and Lowe's with Target, because expectations have been set. Target has moved based on what Walmart has done, and now it's just a matter of whether or not they can deliver. What's interesting from the stock perspective, before I get into the data, is they have this massive gap in the chart, and everybody always says gaps will always fill. They went from 210 down to 160 a couple of earnings reports ago, and now they're sort of in that range where they're maybe starting to fill. And if you're a technician, they're hitting sort of a double or triple top at 180. So all kinds of very fun stuff happening right around this level. So they hit the brakes right around 180, but a good report could put them over the edge. When we look at the data, there's a lot of things to look at. I like to look at the comparison between Target, Walmart, and Amazon. And when you look at that, Target is slightly doing better than Walmart, so that gives us a little clue. Again, very, very slight as far as being left or right on this chart. Happiness is up and down. We always see Target more happy, the customers more happy than Walmart, so that's no surprise. Amazon did have that report a few weeks ago where they had pretty strong numbers, but expectations were so high that they missed, and the stock sold off a little bit. But Target is doing a good job with their private label. Those mentions are up about 22% year over year. Very strong numbers from that, which of course is going to have higher margins. So we're enthusiastic about that, and we know that customers are obviously worried about inflation, and they're worried about all kinds of macro conditions with prices. But we're starting to see inflation maybe slow just a little bit. So that's a little bit promising as well. And based on Walmart, I can't help but think you've got to be slightly optimistic. But I also think it's all priced in. I mean, I would be surprised if Target beat to a level just sort of like what Alex was talking about, where they not only hit the expectations that they had set for themselves, but also that investors are set because of Walmart. So I don't think there's a lot of room to the upside because of that situation, because they've already got that boost from Walmart. And the data that we're seeing is it's good, but it's more like long-term good. And as far as this quarter goes, it's nothing that we're overly impressed with and nothing that we're getting really excited about. In fact, we've got some early data. We're about 15 days into their fourth quarter. They're reporting on this third quarter, but into their fourth quarter. And if they get into guidance, the early parts of this fourth quarter are not looking great. Now, it is before, we haven't got to Black Friday yet. We haven't got to all of that. So that's going to be huge. But based on previous years at this point in time, we're down based on what we would have wanted to see. So I think expectations are too high. And if they get into guidance, it could be a little bit disappointing.
Landon, the narrative coming out of Walmart's earnings about inventories, about groceries, about margins, all the things that plagued both these names 2 quarters ago, and they've worked through up till now. Shouldn't we just watch for the exact same narrative coming out of Target? You're right, Target and Walmart are similar but different, right? We all know that, we all acknowledge it, but when they break it down, these two names are still very similar. Target's already moved up 3.5% based on the Walmart numbers. Shouldn't we just watch for updates with new, bigger stores and how they're remaking and remodeling stores? Their purchase of Shipped in 2017 is really, revolutionized how they deliver goods, how you can pick up and how they do same day. but it's still going to be, the big problem was their inventories and their margins 2 quarters ago when their stock got hit really hard. And by the way, really good catch on the 180 level here. That's also, Landon, the 200-day moving average. If it breaks through there on a closing level, you know, technicians say this thing could be off to the races. So there's a lot of good things here, but quickly, the narrative should be just pretty much the same as Walmart, correct?
I think so. And you've got so much priced in. Like it, and investors aren't stupid. They see Walmart report and they know, all right, well, Target's probably going to do as well, you know, just about as well. It's not as, Target's not up as much as Walmart is. So there's still that sort of, investors are waiting just to make sure, you know, that the numbers come in just as well. But, you know, other than this whole 180 level moving average and the gap being right there, I would say that there's not a lot of upside. But, you know, as you point out, if you can break through that and you start filling that gap, then it could be a nice little run. So they, you know, if they, hypothetically, if they come out and basically confirm everything that Walmart did and maybe even beat, then not only does that give investors confidence about the company, but it could give them confidence about the economy if you get that confirmation coming in. And of course, I think that you know, Lowe's is also going to impact that as well if they can confirm what Home Depot did. So we have an opportunity. We've got 2 really big retailers have an opportunity to follow up their partners' reports, both good, with some really strong numbers, and it could be a really bullish sign for the market. Now, hypothetically, if Target comes in and doesn't, then that could be a real confidence killer. So it's really interesting situation that we're finding ourselves in. I agree with pretty much everything you said. I think that the inventories were a problem. Walmart's kind of shown that that's gone away. Margins are a problem, but we've got private label demand up about 22%, so we really like that. Shipped has done well, but we've got some data on the omni-channel deliveries from Target that isn't really impressive. I mean, they've shown that they were right place, right time on COVID, but the stickiness really wasn't there, and it's kind of reverted back to where it was about a year ago. So a little concern there, but overall, we're fairly neutral on Target going into this report, and I think it's really just a matter of how you play this given what Walmart's already put out there.
Yeah, and I look at it this way, Landon, I wanted to mention that omni-channel fulfillment mentions, more people are going back to stores over the last several months and several quarters probably. That's probably hurt them, that pickup at the curb. I'll go through a Target parking lot, nobody's parked there anymore. It just seems like people are going into the stores. But if you look at, you mentioned the private label and the partnerships that they have, the higher end stuff, that's where a lot of the inventory issues came from. Will Target be able to, based on your data, get through that? Because, if omnichannel, nobody's picking up stuff, and maybe they're buying more groceries and not buying those partnership products that are at a higher price point, that we could run into some problems here.
I think hypothetically, yes, but the data that we've got is showing that private label demand is up significantly year over year, about 22%, far higher than their overall demand, which is pretty close to flat. So I think that if that's the driver of the inventory concern, I'm guessing that concern will be relieved on this report.
Yeah, and Landon, do you guys have an earnings score here for Target going into these results?
Yeah, it's kind of disappointing. It's +1, which is, it's 1 point away from exact neutral. So we've got we're more sideways on this, but I'm really interested to see how you guys pick this apart, just because there's so much at play with the moving average, the 180 top, the gap fill, Walmart's report, Target being up today. This is really a trader's play. So from a data standpoint, I can tell you we don't see anything blowing out up or super disappointment to the downside. We see more of a likely sideways move, but I'm going to stick around and see what you guys think about the trade.
All right, great stuff as always. We'll see if they can duplicate Walmart's great results, because it's got a lot of ground to make up to Walmart as far as stock prices here. All right, Landon, great stuff as always.
Thank you. Appreciate it.
Yep, that's Landon Swan, co-founder of LikeFolio, helping us break down the data. Now, Kev,